Peace. Back in the building like I never left. This is the long awaited episode 6 of the Big Homies series. In this episode, we're going to cover somebody that I've been thinking about a lot since November, since the market has pretty much entered correction territory. NASDAQ hit correction territory first. The S&P hit correction or bearish territory yesterday. So in light of all of the stuff that's been going on, I've been thinking about this dude. So this episode goes out to Michael Burry. That's right. We're going to talk about the character that Christian Bale, or the person that Christian Bale portrayed in the movie The Big Short. So before we get into that, if you're new to the channel, consider subscribing, turn on your post notifications, enter my $500 giveaway. We're about half of the way to where we need to be so that I can give out that bread. Okay? Make sure you tell your friends and family. Most importantly, it's not about me, it's about you. This channel is set up so that those that are new to investing and trading can learn from someone who is just like them and make some money. So the title of this Big Homies episode is Michael Burry, and we got 7 tips from him to help us make money. Okay, so without further ado, we're going to get right into it. Michael Burry was born on Juneteenth, 1971. He's an American investor, he's a hedge fund manager, and he is also a doctor. He founded Scion Capital and ran that fund from 2000 until 2008. He closed it in 2008 to focus on his personal investments. He is best known for predicting and profiting from the subprime mortgage crisis, which occurred between 2007 and 2010. This is what, largely what the Big Short movie is about. The whole subprime, the whole science with that, mortgage-backed securities, it is complex. So, I've been studying the market for about 10 years, and, even, for me to watch the movie and understand all of the little intricacies of how this actually, how it led up to the bubble and how it burst, it's very intensive. However, that movie, The Big Short, breaks it down. So if you take the time to watch that movie, okay, you can maybe pause it and, hit up Investopedia.com and all these other different sites to understand what they're talking about and how it played out. I think is vitally important, okay? Let's get back into Michael Burry. He studied economics at the University of California. He earned an MD from the Vanderbilt University School of Medicine. And what's interesting about this is that financial investing was a hobby for him at that time. Okay, so here someone took a hobby and actually changed their life around, because although he is a doctor and he has gone and completed the requirements to stay up to code with that, he eventually, wound up running this successful hedge fund. I don't think he's ever, actually practiced medicine. He did what was required. I don't think he ever actually practiced it. So think about that. It started out as a hobby for him and became his livelihood. Okay, he earned a rep as an investor by demonstrating success in value investing. He was so successful that he attracted interest of Vanguard, White Mountain Insurance Group, and even this cat named Joel Greenblatt. Okay, maybe Joel will show up on the Big Homie series. Who knows? If you want that, leave it in the comments below. His philosophy is rooted in a book called Security Analysis. And that book is by Benjamin Graham and David Dodd. It came out in 1934. If you watch the movie Pursuit of Happiness with Will Smith, you'll see when he's going through that training program, he has that book. Unfortunately, I haven't read it yet. I'm about to get to it. Okay. He started Scion Capital with an inheritance and loans from his family. Okay. So let that sink in. Make sure you prepare yourself or prepare the generations that are coming behind you so that they can have some type of money to get themselves together. Okay. And go forward into the future. The name of his hedge fund comes from a book by Terry Brooks. The book is called The Scions of Shannara, and it came out in 1990. In his first year, his first full year as a hedge fund manager, which was 2001, the S&P 500 fell 11.88%. However, his fund was up 55%. Okay, this was because he shorted overvalued tech stocks at the peak of the internet bubble. Okay, so we're kind of seeing a lot of things now. If you look at last year, how the market was just unstoppable. And now we're on the cusp of the Fed announcement, which happens tomorrow. And there's going to be a press conference, unfortunately. And, you know, there are some rumors that we may get a 0.75 rate increase and not half a point. Okay. So I say all that to say, you know, we were at a point 6 months ago where everything was lovely, and it has all come undone at this point. We'll see what happens. There are some people that are calling for it to get much worse. So we'll see what happens. And that ties into the fact that when you look at that movie, The Big Short, or when you study what Michael Burry did, there was no instrument for what he wanted to do. He saw that that industry was overvalued. At that time, they were giving mortgages to any and everybody. The only thing about it was there were a lot of those mortgages that were written with or initiated with teaser rates. So maybe they had, when you signed, you had a 3% or 5% interest rate. And then after, I think it was about 3 months, those rates would change. Okay, so it may double or may triple, you know, after those first 3 months. And he saw that, you know, this is a bubble, this is going to pop. However, he had to have a bank create the instrument. It's called a credit default swap. He had to have them create that for him in order for him to short the market. Then also, he got into a lot of beef. A lot of his clients wasn't feeling that move. It took some time. I think it took well over a year for his bet to play out. Okay, so bear that in mind. And the reason I say that is because when I was looking at the market 6 months ago, 7 months ago, 8 months ago, some of the levels that we're seeing now, like the S&P is around 374 right now at the taping of this video. And I remember when we were well over 400 and looking down at those numbers and saying, wow, will we ever get there? Well, we're there now. Okay, so let's look at this man's history and see what we can learn that we can use going forward. Okay, so back to Burry. By the end of 2004, he was managing $600 million and turning money away. Awesome. Okay. After, his subprime bet paid off, he made 100 million for himself, and he made 700 million for his investors. Okay. So it pays to be patient. Okay. Between 2000 and 2008, Scion Capital had returns of 489.34%. Okay. He closed his fund in 2008, and he started to focus on his personal investing, and some of the things he was investing in is like real hard assets like water, gold, and farmland. Okay. He wound up reopening his fund in 2013, and one of his biggest plays was shorting Tesla. So if you look at, this dude is a player, like Gordon Gekko said in Wall Street. He was a player, okay? So if you look, or you just do a search under his name, you'll find his opinions and things like that popping up everywhere. You got the GameStop play. Made a lot of money off of that. You have the real asset buying. You have stocks he likes. So when we think about getting into this game, whether it's trading or investing, sometimes as a new person, you try to reinvent the wheel. No, we just need to follow the big money. If they're buying and they have large sums of money to push a stock price up or down, we want to follow what they do. Okay, we have the 530 milli he made on Tesla, and his opinion as far as the room for the market to plunge. Okay, let's try and see what his investment philosophy is. Kind of alluded to it when I mentioned the security analysis book. So we're going to get into 4 principles that he uses to make his investing decisions. Okay, so here is his philosophy. Invest with a margin of safety. So you might hear a lot of traders and investors talk about risk reward. This is kind of a process that he has when he analyzes the company and the current price is at, or the price he wants to pay. He wants to build in a margin of safety. Okay. In order to do that, he performs, this is the second principle, he performs bottoms up fundamental analysis. Okay. Third principle, look for great stocks in disfavored industries. So that can help us in a time like this where, everybody's freaking out because of what's happening with the Fed, reducing the size of the balance sheet, raising interest rates, where the economy is, what, different companies are saying in regards to their earnings and things of that nature. Okay. Fourth principle, portfolio management is as important as picking stocks. So all of that work that you do to pick the stocks that you want to trade or invest in, it doesn't stop when it gets in your portfolio. You also have to manage that. Okay, I have some quotes for y'all. Okay, so we have 4 principles that's really the basis of his investing philosophy. And again, I wanted to build on this dude because I really feel like his mindset and his history helps us interpret what is going on right now. Okay, knowledge to culture. Quote number 1. If you are going to be a great investor, you have to fit the style to who you are. Okay? Okay? Quote number 2. I try to buy shares of unpopular companies when they look like roadkill and sell them when they've been polished up a bit. My final quote, which will tie into the Fed tomorrow. He says, sadly, in the highest levels of economic thought in government, questions are not tolerated. It is as if we're dealing with the binary thinking of a fundamentalist religion. Wow. I want to give a shout out to Ed O.G., hip hop artist, because as I was thinking about making this video for quite some time, I always think about that song he dropped, I Got to Have It. And in that song, he said, from Roxbury to Burry, but not the fruit, y'all. Don't make me act like where I come from, because it's brutal. Y'all be safe out there. This is your brother in trading and investing, signing off for the Absolute Boss Collective. Peace.